The crisis in Europe has been moving through the gears this week and has rocked stock markets. We have the G8 leaders meeting as we speak, and clearly they've got a lot to talk about. This crisis, which has been focused really mainly on Greece and the implications for its recent government election, which is going to be reconvened for June the 17th. The towel has twisted a little bit in Greece because focus has turned to the run on deposits within Greek institutions. There are ramifications here for Europe. It involves something known as Target 2 and involves the central bank supporting the Greek banking operations as they lose their deposits. Naturally, that does have significant consequences should Greece be leaving the euro and returning back to the drachma, which is clearly something that is talked about much more widely, not just by investors and stock market speculators, but increasingly by central ministers within the German Bundesbank. So clearly we've had significant developments this week. It is also impacting quite heavily now on other European countries, and whilst Greece will dominate, the ramifications for Spain are becoming much more centre stage, and so we've got a few charts really to show how that is beginning to impact. If we first of all take a look at the FTSE 100, we can see here that we've really seen a straight line fall now from nearly 6,000 to about 5,300, putting the year-to-date performance for the FTSE at around about a negative 5%, so up at 7% during the course of March. It's lost sort of 12% in a relatively straight line. At the moment, the FTSE 250 is still holding into positive territory. Some other markets are holding on. American markets, in fairness, have been holding on quite resiliently. But we are seeing full rollovers in stocks such as Apple, for example, which have been the major constituent or the major reason why US markets have been performing strongly in the first quarter. This obviously coincides today with the launch of the Facebook IPO, which is expected to start trading this afternoon. An issue price of $38. The range of expectations about where that stock will start trading range from somewhere between $38 and $52, so that will be watched quite closely this afternoon. But returning back to the crisis, this chart summarises the problems I mentioned in Spain, and this is the Spanish retail bank, Bankia, that we commented upon just literally in the last week, where the government stepped in, converting a loan into $4.5 billion of equity. It's not sufficient for the markets. They've made their judgment, and you can see there how quickly the share price has been responding to that. We've seen 20 to 30% daily moves in that particular stock. So we've clearly got an issue in Spain at the moment, where we haven't quite seen people queuing to take deposits out the door, but we've seen this particular movie before, I guess, and where these things begin to start with deposits coming out and being reported more widely in the media, it can spark a little bit of panic, and as I say, we haven't seen the panic yet, but the more it's reported, I guess we may move into that sort of territory. What implication is this having on the euro at large? Well, you can see here that the euro itself is now coming under pressure, largely supported by the strength of the German economy. This European crisis will ultimately question the strength of Germany, because there's a lot of money required to try and keep Europe together. The numbers being bandied around just for the consequence of Greece leaving are significant sums. The numbers that will be bandied around unquestionably about Spain's role going forward could even be too big for some of the strong countries of Europe to be able to keep the whole thing together, and that is beginning to impact quite heavily on the currency. So we're seeing the currency now down at levels which are close to the year lows at 120 to 126. The pound also is beginning to see a little bit of weakness, particularly against the dollar, and that is a reflection that the dollar is coming back to its safe haven status again. So clearly risk is coming right out of risk markets and going back into the safe havens of US treasuries and the US currency, and clearly we can see here that we had some strength in the sterling against the dollar for a period of time, but that has significantly reversed, and we're back into into the mix there of 157. Interestingly, the sterling is holding up quite well against sterling at the moment. Now, in terms of some of the stocks, the ramifications, well, there are question marks over worldwide growth in light of that, and we can see here that the mining sector often plays quite a significant role in that respect. Commodity pricing is coming off. We're seeing weakness across the board in some energy stocks, some hard commodities, and take a look at Rio Tinto as a guide. At the beginning of this year, the stock peaked out at around £40. It's back down to £28 here. Difficult always to know when to start buying stocks such as these, but do recognise that small sentiment shifts in the macro picture surrounding, for example, developments in the Eurozone. At the moment, everyone is sort of starting to paint the worst case scenario. If we can pull back from that particular scenario, then it's commodity stocks that I suspect will be one of the leaders for bounce. So significant discounts, and certainly one to keep an eye for the riskier short-term traders. I'd also highlight just a couple of other energy-based stocks that are showing significant falls. BP down from £5 to sub £4 at the moment, and BG Group, which is one of our preferred plays, down from 15.50 to 12.20, and that's despite BG this week reporting significant progress in its Tanzanian operation. So they've had some good news this week. Just finally, going to finish on the gold price. We have seen weakness in the gold price during the course of the first few months, but quite a big bounce seen there, and I think it is beginning to reflect this heightened concern around Europe, heightened concern about the monetary base of Europe at the moment, and possible ramifications more for the world if this is to run, or to be allowed to run, pretty fast. So the G8 committee, they've got an important job to do this weekend, as I say, it is to try and sort of pull back from what is clearly starting to look like worst case scenarios for investors.